at REITWeek 2013 in Chicago, and joining me today is Drew Alexander, President and CEO of Weingarten Realty Investors. Thanks so much for joining us, Drew.
My pleasure.
Balance sheets are an essential differentiator among companies, especially in today's environment. How is your balance sheet looking, and how are you set up going forward?
I think our balance sheet's in excellent shape. Our debt to EBITDA is 6.18 times. You know, our leverage is comfortably under 40%, about 34%. So we're in excellent shape. Our maturity ladder is also good. We announced a major capital recycling initiative a couple of years ago, and that and refinancings, I think, have put our balance sheet in excellent shape.
Now, your company is active in both development and acquiring assets, obviously. Which do you see as the most effective path to growth in today's market?
We really work very much on both. In the shopping center space, we're not seeing a lot of new development opportunities. The tenants are finding just enough space that they can avoid paying the premiums that would be necessary to make new development pencil out in a lot of cases. The supply demand, I think, will change over the next several years, and we'll see more new development. And one of the things about Weingarten is we're very experienced in both development, acquisitions, redevelopment, as well as managing our own portfolio. So we'll really always look at both. I mean, if you can acquire a good asset and not have the risk of a new development, you know, that's a great tool to have in your quiver. But if you can create the additional shareholder value because you have the development skills, the tenant relationships, the skills that we have in construction and entitlement, you know, new development has been very profitable for us over the 65 years that we've been a company and the almost 30 years that we've been a publicly traded REIT. So we'll work very hard to do both.
Now, we've seen strong support in Washington for the Main Street Fairness Act, which will level the playing field between online and traditional retailers. What impact do you think that legislation will have on your business and your tenants? I
think it'll definitely help. As you say, it will level the playing field. It's been a tremendous amount of work on behalf of NAREIT, ICSC, myself personally, and a number of other folks. You know, I've met with a number of legislators on both sides of the aisle, and there are some people who, for reasons that personally I don't think make any sense, you know, don't understand that it is just a leveling of the playing field, and it's really about the fairness and collection of the taxes. It's not even a new tax. So I think we will get there, and I think it's helpful. You know, while you're talking about a 7% price differential, which isn't huge, you know, vis-a-vis if a retailer had something on sale, there's something psychological about taxes that people just sort of feel that they're, you know, they're sticking it to the man, even though at the end of the day, we are all the government in a republic democracy like the United States. So I think it psychologically will help, and I think we will get there. It makes a tremendous amount of sense, and at the end of the day, it is just a collection effort. You know, it's not a new tax, and I think more and more people understand that.
Thanks again for joining us, Drew.
My pleasure.
I'm Carissa Chappelle for REIT.com.